What exactly is responsible for the current economic crisis? The general public has blamed the supply chain for the country's financial system, but for some weird reasons, the investment banks are to blame. Most times, when we are informed that the economy is facing a financial downturn due to some external issues, it's typically misinformation. Investment banks have essentially engineered every financial collapse in history, and most certainly they are to blame for the current financial crisis. See, around the world, Goldman Sachs operations and associated controversy have given rise to numerous legal disputes and questions regarding the bank's possible participation in international business and politics. But how are they involved in the current state of the economy? Goldman Sachs wasn't always the investment bank that everyone seems to hate because of their ability to amass wealth while projecting a guilt-free, cherubic image. Its bankers were once known as billionaire Boy Scouts. But Goldman's bankers are now much more frequently compared to squids than to Boy Scouts and are a favorite target of anti-bank demonstrators. Matt Taibbi described Goldman Sachs as a big vampire squid that supposedly engineered every major market manipulation since the Great Depression in the wake of the financial crisis of 2007-2008, when some claimed that Goldman had manipulated its shareholders and benefits from the crash of the mortgage market. The firm came in for extremely harsh criticism. The United States Congress, the United States Department of Justice, and the U.S. Securities and Exchange Commission all launched investigations during that period, which was called one of the darkest chapters in Goldman's history. A lawsuit brought by the SEC led to Goldman having to settle for $550 million. Journalists McLean and Nocera claim that Goldman Sachs was exorciated by the press and the public despite the fact that its business is not in the retail sector, which would ordinarily have kept it out of the public eye. The $12.9 billion Goldman obtained from AIG interbank payments made as a result of the bailout of AIG, the $10 billion in TARP funding it obtained from the government, and a staggering $11.4 billion set aside for employee bonuses in the first half of 2009, gave rise to clarity and animosity. While congressional investigations criticized all the investment banks, Goldman Sachs had a solo hearing before the Senate Permanent Subcommittee on Investigations in a highly negative report. It is claimed that its customers were aware of the bets it was making against the mortgage-related security mechanisms it was selling to them, and that it was merely acting as a market maker and using those bets to protect itself from losses. Additionally, the company vowed a complete evaluation of our corporate standards and processes, greater transparency, and improved client interactions. In addition, Goldman has been accused of a variety of other wrongdoing, such as a general deterioration in ethical standards, cooperation with authoritarian regimes, cozy relationships with the U.S. government through a revolving door of former employees, insider trading by some of its traders, and raising commodity prices through futures speculation. In these matters, Goldman has denied any misconduct. Now, a 635-page study titled Wall Street and the Financial Crisis: Anatomy of a Financial Collapse, published on April 14, 2011 by the United States Senate's Permanent Subcommittee on Investigations, outlined some of the reasons for the financial crisis. According to the research, Goldman Sachs may have deceived investors in order to make money off of the collapse of the mortgage market. To ascertain whether Goldman officials had broken the law, the chairman of the subcommittee forwarded the report to the U.S. Department of Justice. The Manhattan District Attorney served a subpoena on Goldman 2 months later for pertinent information regarding potential securities fraud, but on August 9th, the Justice Department declared it would not be prosecuting Goldman Sachs or any of its employees. Floyd Norris, the New York Times chief financial correspondent, charged Goldman Sachs with deceiving investors in April 2009 by puffing up its first quarter 2009 income by generating an orphan month in December, to which it shifted significant write-downs so they would not be included in any quarterly number. Now, the business reported a $780 million net loss for the entire month of December and April 2009, but net income of $1.81 billion for the first 3 months of 2009. However, the company had to switch to a calendar fiscal year when it became a bank holding company, which was later disclosed and resulted in stub month of December 2008. On December 15, 2008, a Securities and Exchange Commission filing was made since it became apparent in December that LyondellBasell would apply for creditor protection and would not be able to pay its financial commitments. The loss for December also contained an $850 million mark-to-market write-down on loans to the chemical manufacturer. The majority of analysts and the conventional banking media were not startled by the December loss because, well, they were aware of the necessary shift in the fiscal year and the deteriorating market circumstances going into December. Merrill Lynch suffered losses of at least $8.1 billion during that same time period, and Morgan Stanley, which had to switch to the calendar year for accounting reasons after becoming a bank holding company, also reported significant losses for the stub month of December. However, unlike Goldman, Morgan Stanley also experienced losses in the first 3 months of 2009 due to its successful financial performance. Goldman made some of the largest bonus payments in its history in June 2009 after the company had paid back the U.S. Treasury's TARP investment. After receiving TARP funds in 2008, Goldman decided to give 953 employees bonuses worth at least $1 million each. At the time, Andrew Cuomo, the Attorney General of New York, questioned this action. However, within the same time frame, CEO Lloyd Blankfein and 6 other senior executives decided to forego bonuses, citing the reality that we are part of an industry that's intimately involved with an ongoing economic turmoil as the reason for their decision. On May 10, 2009, Goldman Sachs agreed to settle a probe by the Massachusetts Attorney General's office into whether the company assisted in the promotion of deceptive home loans in the state by paying up to $60 million. Goldman Sachs provided advice on the sale of Dragon Systems to Lernout and Houseby of Belgium for $580 million in L&H stock in 2000. Later, accounting fraud caused L&H to fail, and its stock price fell sharply. Jim and Janet Baker, the company's founders and jointly 50% shareholders, sued Goldman Sachs for deliberate and willful misrepresentation and breach of fiduciary duty after Goldman failed to inform either Dragon or the Bakers of the buyer issue. Also, Exodus Communications was accused of receiving its highest stock rating from Goldman Sachs despite knowing that Exodus did not merit such a rating. Goldman Sachs was accused of repeatedly releasing research reports for Exodus Communications that contained wildly inflated financial projections. The charge against Goldman Sachs is that it solicited kickback bribes from institutional clients who turned over equities that Goldman intentionally undervalued in initial public offerings that it was underwriting and made significant profits doing so. Initial public offerings arranged by Goldman were underpriced, and Goldman pushed clients who might profit from the prices to grow business with it, according to documents under seal in a decade-long litigation. Now, the clients cooperated with these requirements voluntarily because they knew they had to in order to participate in other undervalued IPOs. This strategy defrauds both newly public companies and their original consumer stockholders. Citizens for Tax Justice noted in a report from 2016 that Goldman Sachs claims to have 987 corporations in offshore tax havens, 537 of which are in the Cayman Islands, despite not having a single legal office there. Officially, the group holds $28.6 billion offshore. The report also mentioned the employment of similar tax evasion strategies by a number of other significant U.S. banks and businesses. Goldman Sachs' effective tax rate dropped to 3.8% in 2008 from 34% the year before, and its tax obligation dropped from $6 billion in 2007 to $14 million in 2008. The Thomson Reuters League tables show that from 2011 to 2013, Goldman Sachs was Malaysia's most prosperous foreign investment bank, due mostly to its dealings with Malaysia's sovereign wealth fund. One Malaysia Development Berhad, the bank had a 21% market share in the investment banking sector of the country in 2013, which was double that of its closest competitor. U.S. prosecutors started looking into Goldman Sachs' assistance in helping 1MDB raise more than $6 billion in 2015. According to reports, Goldman Sachs will get above-average commission and fees from the 1MDB bond deals totaling about $600 million or more than 9% of the profits. Today, the country is experiencing one of the greatest economic downturns of all time. So, do you think Goldman Sachs is to blame? We'd love to know your thoughts in the comments section below. And that is all for this video. If you enjoyed it, make sure you click the like button if you haven't subscribed yet. Ensure you also click the subscribe and, most importantly, click the bell icons to be notified when a new video is uploaded. Also, feel free to leave a remark if you have any recommendations for videos. Have a great day, everyone. Thanks again, and we'll see you soon.